in this webinar today, we're going to talk about ABLE accounts and how to use them, why your child might need them or want them, how to coordinate an ABLE account with a special needs trust, and do you need anything more than an ABLE account? Hello, everybody. This is Keith Caldwell with How to Secure the Future and Ryan Platt. Ryan, introduce himself.
Oh, boy. All right, everybody. I love Keith, man. He's like, let's get running. We'd start out the gate like a 100-meter sprint. Let's not mess around. I love that. Yes, I'm Ryan Platt. So Keith and I came together, goodness gracious, about 7 years ago to try to bring high-quality, accurate information for folks. And we have parlayed that not only into accurate information, but actual action steps that you can take with the How to Secure the Future website and course guidance that we've put together on every single topic that you need to make sure your plan's appropriate. I also had started a company called the Special Needs Plan, where we've been working one-on-one with families since 2005 and creating these plans and managing them over 2 generations. So what we've tried to do is bring those two together with How to Secure the Future, to help folks. So we are so excited to be here in that respect. Today, we are focused on ABLE accounts. Again, if you guys have been here before, which probably many of you have, I don't want to totally bore you, but I at least want to give you some background. ABLE accounts came into existence at the end of 2014 or passed into law at the end of 2014. Then they had to get ratified by each individual state. Not every state has ratified it, but it doesn't matter because you can use any ABLE account you want from any state that you want to. So even if your state doesn't have an available ABLE account, who cares? Because you can use any other states if you choose to.
Hey, Ryan, let me go a couple of administrative points real quick because some people come in. I want to make sure they get it at the beginning. On September 17th, we're going to have a special guest on a topic we've never, ever had before. It's going to be attorney Stephen Dale with the Dale Law Firm, Dale Law Firm. They're the company who did my son's trust, but he's going to talk on the topic of pooled special needs trust. Now, we've covered special needs trust over and over again, but he's going to talk about the purpose and use of a pooled special needs trust. So I'm totally looking forward to that topic. That is on the 17th. Let's see. And on the 24th, we're going to have a private webinar for those who are part of our membership group on the ABLE account itself, where we're going to actually roll up our sleeves and we're going to have you guys create and get yourself an ABLE account on that day. So that's our goal and that's our purpose. So with that, Ryan, go ahead.
Awesome. Yeah, and I'm so excited too. And everybody here should be. If you've been coming to these before and you just see Keith and I, man, how refreshing is it going to be for you to see somebody else? I mean, thank goodness, right? Get some other blood in here, which is going to be super for everybody. It's going to be super for Keith and I. I guarantee you we'll learn something. So, and that's the goal of every one of these webinars is that you learn something. And obviously, it's always good for Keith and I to learn something because we're not arrogant enough to think that we know everything. So, so it's so wonderful that Keith was able to reach out to Stephen Dale and have him join us. So it's really exciting. So the ABLE account, right, as I mentioned, doesn't matter which state you're in, you can still use an ABLE account in any other state. There are some states that will not allow non-residents to use it, or it costs more for non-residents to use it. So the easy thing there is you just don't use that one if you don't live in that state. So not a big deal. There are enough states that offer ABLE accounts that you don't have to worry about those that don't offer them to non-residents of their state. So the benefit of an ABLE account, what's the brass tacks here? What's kind of the bottom line to an ABLE account? Is it's another place where your child can have assets above the $2,000 asset limit and still qualify for government benefits. Before 2014, there was only one place for that, and that was called a special needs trust. Now there's two, right? There's an ABLE account that you or your child can place assets in, again, above the $2,000 asset limit and keep their government benefits. It is such a fantastic account to have at our disposal when you need it, right? Is it something that you have to have right away? Not necessarily, but it is something that you will most likely have at some point. And so let me give you one example of that really quickly. I just got off the phone with a family. Grandpa, literally at 1:45, Keith called me because I wasn't on here with him ahead of time because I was talking to a family about an Able account 10 minutes before we started this webinar. He's like, Ryan, did you forget? I said, no, I'm coming. And so here was the issue, right? Granddad wanted to give $10,000 and he gave it directly to the granddaughter. I was like, oh, right? Oops, right? Error, right? But what a fantastic learning experience for us and everybody else, and for them, because they still had a chance to move it without impacting the government benefits, right? It was so new. That money was so new in that account. We had a chance. And so again, great use of an Able account is, that family could go open the Able account and transfer that 10 grand into the Able account. No issues. Government benefits still stay, right? So Able accounts have a fantastic usage in that way. One of the things you want to be cognizant of with Able accounts is there are some limitations. The limitation is the amount of money you can fund in a calendar year. So from January to December. And right now that number is $15,000. And it tracks the estate tax gift exclusion number. Is that a mouthful or what, everybody? Not right? But it tracks that number. Right now, that number is at 15,000. It could certainly go up in the future. And according to how the law is written, the Able account will rise with that number. So again, if that same family called me on the phone, 20 minutes ago and said, hey, they left 20,000, well, conversation's a little bit different because you can't cram $20,000 into an Able account. So there are some limitations, which again is why a special needs trust and an Able account do not replace one another, but instead complement one another, which is what we'll talk about a little bit later as well. So I don't want you to think an Able account replaces a special needs trust, although when you look at it as a global view, a lot of times they have the same reason, right? Hey, I want my child to have resources, but I want to protect them from government benefits. So where do I put the money? Right? Quick answer is, well, you can put it in an Able account. But that's the quick answer. The next questions are, where'd that money come from? How much money is it? And how much money do you think you will continue to put in it? Because another one of the limitations of an Able account is once the account value, so that's contribution plus growth, reaches $100,000, SSI, which is supplemental security income, which is a monthly income for your child, will be suspended. Medicaid will continue. Waiver services will continue, but that monthly income, if your child's on it, will be suspended if that account value goes above $100,000. And that's where that's where the special needs trust comes in, right? If you do have more than 100, right, and you're managing what you're going to do, or you have more than $100,000 of assets and you're planning on, okay, I need to live on these assets, but when I die, they need to go to my child for their lifetime needs. Well, again, you want to make sure that the majority of those assets more than likely go into what's called a third-party special needs trust, and then keep the Able account for smaller dollar amounts, because the special needs trust doesn't have any of those caps. So you could have $5 million in there and they won't lose SSI, right? That won't be suspended. You can also put more than $15,000 at a time, or in an annual, in a calendar year, you can put more than $15,000 in a special needs trust. So again, special needs trust is a good use for larger lump sums of money later in your life or when you die. Able account is a great use for now, smaller gifts, birthdays, holiday gifts, or if your child's working, right? We have quite a number of adult children who have a disability that are working. They may not be working full-time, but they're working part-time. And where do we put that extra money if we're not spending it because they're living at home with us? Well, before the ABLE account, you had to spend it. You just had to buy another pair of sneakers. You had to buy another mattress, even though you have 3 in the closet, right?
Mm-hmm.
You have to buy another flat screen TV.
Another iPad.
Yeah, or another iPad, right? That you don't necessarily need, but you had to get rid of the money. Well, now we don't have to do that anymore. There's a spot for it, the ABLE account. So it's a fantastic account for your child's money, right? If they're earning some money, or even if they're not using all of the government benefits, you can slide money into the ABLE account that's theirs. And it can accrue more than that $2,000 of assets. So that's a great use of when you use ABLE accounts, right? Smaller sums of gift money, you know, from whether grandparents or from you or aunts and uncles, right? Holidays, birthdays, or just, you know, grandparent gifted. Maybe you have a situation, and this happens with grandparents. They have 3 grandchildren. They just wanted to gift $5,000 to all 3 grandkids. Great. Well, that $5,000 is a great place for the ABLE account. And again, one of the reasons why, you know, why it makes sense to have an ABLE account is because it's open and accessible for all those things, as we mentioned, right? If your child does receive a job, great, it can be put in there. Or another question I've received in the past, and we've received actually in previous ABLE account webinars, recent ones, is, well, what do I do with that extra $1,200 stimulus that I got from the CARES Act due to the coronavirus that happened just earlier this year? I've received that question. I got that question today, as a matter of fact. Right now, you know, in that CARES Act, you know, there is a rule that you have a certain amount of time to spend that. So it's not like Social Security will count it right away. So you do have time to spend it. But that's another one of those unexpected dollars that flowed in. Again, wasn't from family, wasn't gift, but it was unexpected money that flowed in. So if we already had an ABLE account open, awesome, got that money, move it right to the ABLE account. Fantastic use for the ABLE account, right? No stress, no anxiety of like, oh my gosh, the account just went up to $3,500.
Mm-hmm.
We're about to get paid again from SSI, right? And all of a sudden, all those anxiety-ridden, stressed thoughts happen. Oh my God, they're going to lose all their benefits. Mm-hmm. Well, again, we can just have the ABLE account available and open and fund it with some money so those unexpected things occur and you can slide it in there. So that's another great use of an ABLE account. That is really, that's a better use for an ABLE account than a special needs trust. Mm-hmm. Because again, special needs trusts are fantastic, like I said, for larger sums and for probably later on in your life or when you pass away. And one of the reasons for that too is that special needs trust management is a little bit more complicated, mm-hmm. right? There's taxes that are a part of that. There's different types of taxes in there. There's more tax plan, different kind of accounts. How do you manage it? There's more cost because there's a tax return to do, those kind of things. ABLE account is a little bit simpler, right? There's no tax return to do. If the money comes out for qualified disability expenses, there's no taxes at all ever inside that account. And so it's a little bit easier. Yes, every ABLE account charges an annual fee, but it's usually pretty low, you know, 45 to, you know, I think 60 maybe at the highest, or $75 a year. So it's a fairly low cost to maintain, and it's an easy item to maintain in your portfolio. One of the things that we suggest is, again, we just don't want to crowd that with a lot of money, but use it, like I said, for those gifts, and then use the money out of it, right? Let your child spend the money out of it, right? Teach them how to use it, mm-hmm. If they have that skill set, or if you think they can learn it in some form or fashion, because many ABLE accounts will come with a debit card or a checking account. Right. And if your child has that ability, or you think they might be able to learn that skill set, ABLE account can be a great piece to help them learn that going forward.
Just to point everybody, I'm seeing your questions and I will get to them, but I'm letting Ryan do his initial, I guess, monologue, soliloquy, whatever you want to call it. But I see you. I'm going to get to you in a little bit. All right, everybody? Go ahead, Ryan.
Well, hey, if they have questions, I say let's start answering them instead of me just going on a soliloquy.
But I want to make sure you address what we promised we're going to do. So you talked about why our child would need or want one. We talked about how to use it. But you haven't yet talked, I think, about how to coordinate with a special needs trust. Yeah.
So great point, Keith. Thank you for keeping me on task. And again, when we think about coordination with a special needs trust, we really think about later on in life. And this is where they can complement one another. So again, ABLE accounts are a little bit more what I would say flexible in what qualifies for disability expenses, right? A qualified disability expense. In ABLE accounts, you can almost pay for just about anything that is for your child or for them. So you could even pay for some housing, right? Some rent. You could pay for grocery store. You can pay utilities. You can pay for the iPad. You can pay for the mattress. You can pay for clothes. You can pay for vacations, entertainment.
Golf lessons, whatever.
Golf lessons, exactly, right? You could pay for, a day program that's private. You could pay for basically anything, right? It's pretty wide in what you can pay for. Special needs trust is a little bit different. You're still not supposed to pay for really housing and grocery store, right? Kind of the main staples of life. That's really what government benefits are supposed to provide. That's why a lot of times they'll call a special needs trust a supplemental needs trust, right? It's supplemental to government benefits. But one of the things that was changed in June of 2018 is some of the rules in terms of how to use a special needs trust and ABLE account. And what that is certain types of special needs trust, you can take money from that special needs trust and put it into the ABLE account and then use the ABLE account to fund certain pieces. And so that just allows a lot of flexibility and a lot of complementary use between those two tools, which is why we always say it's not an either or. It is absolutely an and. Those next people, that next team that's going to take care of your child and their needs are more than likely going to use both an ABLE account and a special needs trust to help your child with the cost of daily life. And that's such the benefit of both those tools put together, because you can really use the best of both for the advantage and efficiency and effectiveness for your child's long-term future.
Well, let me clarify how I see it and how I use mine differently. Is I say the ABLE Act or ABLE account that I have for my son is I have full access to it. I can say I'm going to buy that and done. I need to do something with the trust on maybe a larger transaction. I got to talk to the trustee. I've got to sort of agree with it, and then they'll write the check. If it's over a certain dollar amount, because I have it structured this way that my ex-wife and I both sort of have to sign off on. Oh, it's more than $2,000. I can't just say, go take $2,000 and buy this for my son. I got to get my ex-wife to agree to that, and vice versa. It's one of the things we put in there to sort of have involvement in the decision-making process for larger amounts. And I also use the ABLE account to be a lot more flexible, because when my brother and sister or people want to give my son a gift because he's really hard to buy for, they just put money into the ABLE account. And now I can get golf lessons, which is what we're paying for right now for him to do golf. And he loves it, and driving range. He doesn't want to do putting anymore. He wants to do driving range. So it's a lot more flexible, a lot more fluid, a lot more easy to use. There's no annual report. There's no tax return. There's no accountants getting into your dollars and cents. So if money goes in, you can spend it out for your day-to-day living to help support your child for funds that are coming from other people. So that's how I sort of use it and how I distinguish between the two.
Man, aren't we glad Keith is here? Because he said that so much better than I did. And so thank you, Keith.
It's a different perspective.
That's awesome. But you're exactly right. So thank you.
Let's see. So you've already sort of answered the question about, do we need something other than other than an ABLE account? And the answer is unequivocally, you need them both. In his professional opinion, in my layman's opinion, I think you need them both. They serve different purposes. One is a larger life paying thing for generation. The other one is sort of day-to-day expenses, things, because you only can have $100,000, which makes a question. Since I'm the host, I get to ask the first question, right?
Amen.
Why do I see on all these ABLE accounts, they're talking about $500,000 limits? What does that mean when you say you can only have 100,000? Like California, I can do up to 526,000. What's the difference between those two?
Good question. So what they do is ABLE accounts, when they put it into law, it's in the same area of the tax code as the 529 college savings plan. So it follows the same maximum contribution amounts as 529 plans for your state. And every state's going to be a little bit different. So you are exactly right, Keith, that ABLE accounts have a higher maximum contribution amount. Like you said, California, 526. Other states are 425. Other states are 305, right? That's how much you can put as a maximum contribution into the ABLE accounts. What I'm talking about is what's the impact on government benefits at different values inside the ABLE account. So the reason that I use that $100,000 number has nothing to do with the maximum contribution that ABLE accounts will allow you to put in, right? They'll allow you to put in those higher levels that you'll see on those websites, those state websites. When you look at what's the maximum I can put in, that's what they're going to tell you is the maximum, which is absolutely true. What I look at is, well, when do these affect or impact possible government benefits that your child might be receiving? And so if your child's receiving SSI, supplemental security income, which is a monthly income, then at $100,000 of value inside the ABLE account, even though it can go higher than that due to the rules, due to the government benefit rule, at $100,000 of value, contribution plus growth, SSI, that monthly income, will be suspended, which is why I always suggest that you should keep it under that $100,000 number, especially if your child's receiving that SSI income.
Don't even risk getting there.
I wouldn't even want to get close.
Because my experience with the Social Security, they find out really quickly and they'll shut you off pretty quickly. So let's go to a couple questions because we've got a ton of them coming in. So I'm going to go ahead and see where the first queue is. Hold on, everybody. Linda asked, what's the difference state to state? Linda, I'm going to enter in, when Ryan's asking a question, a link to a website that has, it's the definitive source on ABLE Act. I'm going to put it in, I don't know off the top of my head. So when Ryan's answering a later question, I'll put that in there for everybody to look at. I would encourage you to go to that website. You can search by state, your own state or other states, see what states are allowing you to be out of state to use their services and vice versa. I'm here in California, so I use the CalABLE account. The attorney who's going to be speaking in a couple of weeks on the board of directors for that. So he might be able to speak briefly to that as well. So I'll enter that on in just a second. I'm not forgetting you, Linda. But that is the definitive source for all things ABLE. So everyone keep that, log that one. So let's see. Here was a question. So Mary here here in California as well. I'm not sure if I know you're not, Mary. If not, hello. Here in California, Medicaid and medical told us on the phone that if our son has his name on any bank account, then we lose Medicaid, Medi-Cal waiver. Is that true?
If that bank account is above $2,000, yes, that is true. But that brings up a good point. Just to be clear, an ABLE account is not a bank account. An ABLE account is a very specific type of account that you don't open at the bank. If you try to go to a bank, they're probably going to look at you with three heads because they're not going to know what the heck you're talking about. We're like, oh yeah, we can open up an account for you. I don't know why it's called. You're calling it an ABLE account, but we'll open up a checking account. You have to go to the individual state's website, right? So it's opened up on the web through the individual state's websites. It's not opened at a bank. It is managed by each individual state, and that's where you can go to open one up. So please don't make that mistake. Please don't open it up at the bank and start funding money in there, because it's probably not going to be an ABLE account. And then that's when you can get in trouble with Medicaid and waiver programs.
Yeah, because I mean, California, we have the Cal ABLE. I'm not sure if we have another or not, but that's not a bank. It's been sanctioned by the state, and it's by the state Treasury Department. So it's totally different. If I went to Chase Bank or Bank, they'd be looking like I'm crazy, like you're talking about.
Right.
Okay, so hopefully that answers your question there, Mary. Zeke says, I have a 529 account for my son, and I heard that I could move that money to an ABLE account when I called the company. But when I called the company to ask about it, they said they are not doing now, or they can't do it. Is it possible to do, and how is it supposed to work? Let me answer that unofficially. I had a 529 account for my son. He's not likely to go to college in that way. So I did, in California, transfer from my 529 account into my ABLE account, and there was no problem. My Cal ABLE facilitator handled the entire process. I just gave them the account numbers. They went in, grabbed the money, and brought it in there. I never touched it. So they can do it. So you probably got a little bit more digging to do, but I'll let Ryan give the professional answer.
That was the perfect answer, because that's exactly. So the question that I would ask you, Keith, is can you explain a little bit more about the mechanics? Did you have to sign any paperwork? What mechanically, if you remember, did you have to do in order for them to go get the money?
I did have to sign something authorizing them to do it on my behalf. I think it's some kind of agency on their behalf that they allowed me for them to go talk on my behalf and request the money. But it was all automated. They're all, sign this form that I'm telling you to send here, put this here. I didn't have to get anything notarized like that. And then I sent it back to them. I uploaded it to their website, in fact. And then it took longer than they said. They said maybe a week or so, but it was longer than that. It was more like 3 weeks before it actually transferred. But it was a transfer over, and I never touched the money, never came to me. It was just they requested it, they took it out, and then the other account that it was, the 529, is zeroed out as a zero balance now.
Yeah. And could I ask you and if you don't want to answer it, please don't. Round number in terms of the amount that was in the 529 that you transferred over?
I think it was like,
okay, let me ask you a different way so you don't have to do that. Was it more than $15,000?
No.
Okay. And that's a big distinction, everybody. So that's why I asked that question. So Keith could do that in a calendar year because the 529 had less than $15,000 in it.
Mm-hmm.
Important. So if your 529 has more than $15,000 in it, and if that's the situation that you're in right now and they're saying no, that's where you're going to have to do a little bit more massaging and conversation with them, because they probably don't know that you can do $15,000 per year until that 529 is all the way over. So it's different. If anybody on the phone has ever had like a 401k and you left a job with a 401k and you wanted to roll it into an IRA, you could do that all at once, right? Okay, I have 150 grand in my 401k. I left this job. I want to roll it into an IRA. Well, you can do that all at once, right? Even though if you were making a contribution to an IRA, you can only do $6 grand a year, right? But they make an exception if you have a 401k and you're rolling it in. You can do it all at once. ABLE accounts aren't like that right now. If you've got 50 grand in a 529, you can't roll it all over into an ABLE account at one moment. You're going to have to do it incrementally over a few calendar years.
Well, that brings
that might be an issue that they're having and not understanding how you want to do it. Right. So be clear with them that, hey, all I'm doing is transferring 15 grand this year. And then January 2nd, you can call them and transfer another 15 grand.
Well, let me make a couple, because I remember now that you brought that up. There's a couple of distinctions relative, because I did it toward the end of the year, right?
Okay.
So it became a question of, one, did anyone else contribute towards my son's 529 in that account toward that $15,000 limit? Because if you have 15 you want to transfer, but grandma's already given 5, you can only do 10. That's issue number one. And the other one is the date of the transfer. I couldn't control that because they said 5 days. It could be 10 days. So it may push over into the next year to where you weren't able to get it this year. So if you're going to do it sooner versus later, so that you make sure that the date that is the transfer date is that date of 2020 versus accidentally falling into 2021. Hope that makes sense, Zeke, because I know that came up. They're like, hey, our date's here, but it was later than that because they took longer. It didn't matter to me because it was less than the 15,000. But I could see how if you're trying to time that and you're doing it at the year end, then be aware that there is that potential lag that might roll it over into the next year. So hope that answers your question, Zeke. Melinda asked, I was told that you're able to have up to 100,000. And I think we answered that, Melinda, that you can have more than that, but at 100,000, that's when it starts potentially affecting your government benefits. Right, Ryan?
Yes.
Okay. I'm just shooting through these to make sure we get them all on the ones I can feel comfortable with. And Melinda's continuing that question. You can put up 100,000 into an account without issue. Jamil is asking, are there rules about moving money between an S&T and ABLE account? And can they go both ways, ABLE to S&T and S&T to ABLE?
Nope, they cannot. So depending on the type of special needs trust will depend on that answer. So again, if you have a first party special needs trust, then you can go ABLE into a special needs trust. But if you have a third party special needs trust, which is a distinction of it's their money, right? I mean, I'm sorry.
Yeah, other way around.
The third party special needs trust is not ever connected to them, right? It's never been their money. It's somebody else's, right? It's coming from grandparents or you or. So
is your first point still valid since you were mixing up first and third?
Yes, still valid. Yeah. So first party special needs trust is their money, right? Maybe they got a lawsuit and had dollars sitting in there, right? There was some kind of liability issue or something and had money specifically for them.
So you're saying ABLE can go into that?
Right. It can go in that because both of them are their own money, right? Because an ABLE account is considered their money, their account, which is why you don't want to take an ABLE and put it into a third party special needs trust. Because that will cause issues of what's called Medicaid payback for that third-party trust that would not exist if you never took that ABLE and put it in there. So, special needs trust to ABLE, okay. ABLE account to special needs trust, depending on the type of special needs trust, it would either be a no or a yes.
Okay, and that's something you should talk to your attorney about. Individually too, right?
Yep.
I don't want to get into legal advice. All right, let's see here. Margaret is asking, can you have an ABLE without a special needs trust? I'll let you answer that. I know the answer to it, but I'll let you answer it and why.
Can you have an ABLE without having a special needs trust? Absolutely. They are two distinct accounts. They are not connected at all in terms of your ability to have one versus the other. Again, as we stated before, they can be very complementary and they are used for different reasons. As Keith made a great point, the special needs trust is more going to be used for long-term planning with lump sums of money. ABLE account, more, a certain level that you're going to keep in there and more kind of daily usage.
Okay. Rebecca's answering something you've already answered, but I want to make sure you summarize it to respect. She says, can you transfer money from an ABLE to a special needs trust? I know the answer is yes, depending. Yes. Why don't you really quickly summarize that?
Yep. So ABLE to a special needs trust only if it's a first party special needs trust. So if it's a trust that was already your child's money, and we've had these situations before happen in kind of what I call emergency planning. We had one happen last year. Mom passed away. She only had a house to her name, but it got sold and it was like $250,000 and she had no will, no estate. She had 3 girls. So in the state where she lived, the laws were without a will, all your girls get the same amount. So each girl got $65,000. Obviously that's more than $2,000. That's more than $15,000 of an ABLE account annual funding limit. So what did we have to do? That's her daughter's money. She received it, which means the only type of special needs trust to put it into is a first party special needs trust. So that money went in that first party trust. So since it's in there, that's her money. So if she had an ABLE account, she could always put it in that account because the rules are very similar in terms of a first party trust and an ABLE account. She could take money from the first party trust and put it in the ABLE account. That's fine. But if she had a third party trust from, let's say her dad funded a third party trust and that money never went to her, then you can't take ABLE account money and put it in that third party trust.
Okay. Okay. Joanne is asking, can you transfer money from ABLE to special trust to avoid the $100,000?
Nope. Unless it's a first party trust.
Okay. And just so you know, for simplicity, some people might need to hear it. First party trust happens a lot of times from settlements. Like my son had a settlement as a result of a lawsuit. Somebody else might have a settlement result of some kind of lawsuit. That money was paid to him, but he's not able to receive it. Now, I had a question for you, Ryan, regarding that scenario you just described. Were you able to create that all in the moment, or that you created that first party trust because you knew that this problem was going to exist, meaning that she was going to get this money? Because imagine if the money just showed up at your desk, your door, do you have time at that point to say, hey, Mr. Law Firm, I need you to create a first party trust to put this money into?
Well, it's interesting the way it happened. I was at I was speaking for another organization, and the dad, who's divorced, came to that talk, and he just happened to be there. And it was like what's called a transition fair. So there's a lot of different conversations going on. And he just came to my little breakout session. He's like, oh my God, Lord God put me right here for this reason. And he ran up to me and was like, here's what's going on. I was like, all right, you need to call me. We'll get you with the attorney. You need a first party trust as fast as possible. So the event had already occurred, right? But the mother-in-law and the brother-in-law were the executors. So they were just holding the money. They were kind of holding it up, right? They didn't release it from her estate yet. But since she didn't have a will, the rules were very clear that when they released it, it had to go to her. So we were able to emergency get a first party special needs trust done. So when they released the money, it went to the right spot.
Excellent. All right. Margaret wants to know, why not keep gift money at home instead of an ABLE account?
Why not keep money at home? Like just keep it in cash in an envelope?
Yeah.
Yeah, you can do that. Yeah. That's fine. But don't be careful if you put it in a savings account, because if the savings account gets too high and then you start receiving SSI, which is that monthly income, they're going to look at both that checking account with that monthly income and the savings account together to get towards that $2,000 asset limit. So you just want to make sure, depending on, I mean, again, right? If you keep cash in a safe in your house, are we recording this?
Yes, we are.
Okay, never mind.
But
nobody might know about it.
Well, yeah, and that's the point too, is that you have to plan, Margaret, for the future when you're no longer here. One, if the next caregiver doesn't know you have a stack of cash underneath your thing, it just may get sold with the house, right? Because they didn't know that you had money in this little cubby hole. They didn't know that. Plus, you're not setting up the next caregiver for success, right? You want them to have the ABLE account so they can tap into the ABLE account to have day-to-day expenses being able to pay for. So although you can do it, me as a fellow parent, I would advise you probably not to do it. Just to open the ABLE account so you're positioning the next caregiver to have the tools that they need to take care of your kid when you're gone. My 2 points.
And that cash or whatever that money is protected for the specific use of your child. Right? If you just give cash to the next caregiver, you don't know if they're really using it for your child's benefit. If it's sitting in the ABLE account, it's really clear of what it's being used for.
Could be going to Thunder Valley Indian Casino.
Could be. Could be.
All right, let's see. Melinda, or I answered this question, but I'll go ahead and let Brian do it. Are you able to spend the money in the ABLE account for rent, daily spending, or just for medical?
Yes, you can spend it. That's one of the things that it says on there. It says one of the items that it lists is housing. So that would come under housing, rent, and daily.
All right, Joanne is asking, is ABLE money taxed?
Not if it's used for qualifying disability expenses. If you don't use it for a qualifying disability expense, then yes, you'll pay a 10% penalty and taxes.
Yeah, but it's taxed because you're putting it in after-tax income too, though. I mean, you've already paid your
Yeah.
tax.
Right. Yes. So any contributions that you put in have already been taxed, and then you put it in that account, and any growth that it has is not taxed. So there's no taxable event on any growth annually. So if you put $10,000 in and it grew by 10% in a year, there's no tax on that $1,000 of growth. And then if you take it out for qualifying disability expenses, there's no taxes then either.
All right. Karen is asking, what happens to the ABLE account when the person dies? Can money in an ABLE account be used for funeral expenses?
Yes, it can be.
And what happens to the account?
Medicaid can come back in just about every single state.
Except?
Except California. And that was a Keith Caldwell, per Keith Caldwell. Mr. California, we call it.
On their website. It's
Yep, it is. But right now, in almost every state, there's a Medicaid payback rule. So if your child has money in the ABLE account and has been receiving Medicaid services or have been using Medicaid, they have the ability to come back, tally up the costs, and take the money, before it goes anywhere else, which it can go to another beneficiary if you so choose, if there's money left over.
And I'm assuming in California that that's only for California residents. I mean, you can't be from Nevada and say that, hey, I'm getting a California ABLE, therefore I don't want to pay.
That is that's a great point you make that we need to be clear on, and you're absolutely right. That Medicaid, even if you have a California, you can open up a California ABLE in any state. That you might be a resident of Arizona, Nevada, Florida, and you see that on there, no Medicaid payment. I mean, everybody would use the California ABLE, but because Medicaid is state directed, other states don't have. You have to be a resident of California to qualify for that non-payback. So you can't just open up the California ABLE and live in Nevada and expect not to get a Medicaid payback from Nevada.
Right. All right. Valerie is saying if someone's applying for SSI, should I open an ABLE account first, or does it matter? I'm adding that, or does it matter?
Yeah, I mean, it doesn't necessarily matter. What I like to do is absolutely, especially if your child is less than 18 years old, it's a lot easier to open it up before they turn 18, just because they're not a legal adult yet. And if you're going through guardianship, it's just an extra paperwork to open up the ABLE account if you're already their guardian. So it's easier to open it. So if your child's less than age 18, Valerie, right, and you're going to apply for SSI, I would definitely open it first. And one of the reasons and we've had this happen as well, is a lot of times SSI can take a while to be approved, but they can do a payback, right? They can go back retro and they'll pay you from the date of your application.
Nice.
So if you applied on September 1st, but you don't get approved until December, they go back to your application date and give you September, October, November, December, all in a lump sum, which could be over the $2,000. And then all of a sudden you're going to get another check in January. And you're like, holy cow, I got to spend this money. So that's why, yes, we like to have the flexibility of opening up that ABLE before you apply for SSI, or at least when you're in the process of doing that, so that you have a place that in the event of it takes a while to get approved, you have a place for that retro pay to go without having to spend it quickly.
All right. I've never seen this question before. Richard's asking, can ABLE accounts accept child support payments?
They can accept child support payments after it goes to the spouse who's supposed to receive it.
So you can't pay.
Oh, not really. I've never had that question either, but and again, I'm not a family lawyer or a lawyer at all. So but I would say I haven't seen that done yet, because the child support needs to go to the spouse that it's supposed to be given to, and then that spouse can decide to put it in there. Or as part of, we have done this before working with family attorneys, is that we've set it up in the divorce agreement ahead of time, is to say that, hey, yes, you're going to get this child support payment, but this person is going to be adding money to the ABLE account on a monthly basis, or to a special needs trust on a monthly basis. And one of the reasons that that's really important, and we try to educate family lawyers on this, and this is really important, everybody, on child support for blended families, which we did last time. Child support payments will count as income against your child with a disability in qualifying for government benefits. That's a huge item to know. And most family attorneys don't know that.
All right, explain it to me again, because I didn't understand what you just said.
Yep. So child support payments will count as income for your child when they go and apply for government benefits.
So, hold on a second. Sorry about that. It's my mom calling. But you're saying that the child was married and is getting child support?
Nope. I'm saying that, let's say you and Nicole, and I always use Keith because he's okay with that. Okay. And apparently Nicole is too, because she was with us last month. So let's say we use Nicole and Keith, right? And let's say Keith has to pay Nicole $1,000 for each kid that he has. Well, one of his children has a disability. So that $1,000 a month that's allocated to him will count as income to him when qualifying for government benefits. So we've had family attorneys and couples who understand that adjust the language in their agreement that says, child support's go here, and then for this child, instead of doing child support, we're going to mandate that there's savings going into an ABLE account or a special needs trust of X amount every month.
Okay, I see what you're saying. That's a good example then.
Yeah. So can child support payments go into an ABLE account? Kind of, but they need to be called something different. I don't know what you want me to tell you. It's just semantics, I know, but it's a little bit of I call it strategery and conversation that has to happen.
Okay, Melinda asks for qualified spending examples. I think in summary, you can use an ABLE account funds for pretty much anything. That's for the benefit of your child.
There you go. Thank you for saying those final 4 words.
I was just teasing you there, Ryan. It's like, okay, he's going to give some misinformation. All right, Ruth is saying, why don't ABLE accounts give interest except if you invest? I'm not sure if you're okay answering that or not. I don't know.
Well, just because interest rates are at an all-time low and nothing gets any interest unless you invest it right now. So if you have money in a checking account or savings account, you're probably not getting any interest. If you have money in a money market account, you're probably not getting any interest. So that's just the investment world we live in right now.
Makes sense. All right. Ruth is saying, can you pay for college tuition with an ABLE account money? Probably.
Yes. Yeah. As long as it's for that individual.
Jamil is saying some states give a tax deduction for a contribution. Does that mean we can put money in and just use it right after tax with tax savings?
So if you're going to get a tax deduction from a state, you have to live in that state in order to get the tax. So that's kind of like the California payback thing, right? You can't live in North Carolina and use the Illinois ABLE account and expect to get a state income tax deduction, because it's not a federal tax deduction. If you're receiving a tax deduction for your contribution, it is purely a state income tax deduction. And you have to live in that state in order to get that state income tax deduction. And so if you do get a state income tax deduction for your contribution, great. That doesn't change any of the other tax situation of an ABLE account. The money still grows with no taxes, and when you take it out for qualifying disability expenses, there's no taxes there either. So yes, once you put money in an ABLE account, you can use it for whatever purpose you want, whenever you want to. You could use it the next day.
So that answers his question, is if you put money in a state that allows it, assuming those caveats, then you could spend that money immediately, get the tax benefit from the state, as well as buy your child whatever he needs to get.
Yep. Yep, next day if you wanted to.
All right. Shelly is saying, where is the rule stated at so I can share with families? I'm not sure what rule she's referring to.
There's lots of rules, I guess.
Well, Shelly, take a look at that URL I put in there for the national
Able NRC.
It's got everything in there, so I'm sure you will find information that you can share with families there, as well as you can show them a recording of this as well. Marjorie is asking, could you use dollars for housing from a special needs trust if government benefits was not sufficient?
Ooh, that's a tough one. Layers and layers and layers upon that question. So first answer is you're not supposed to. Second answer, if you do, that will count as income for your child. So you have to watch how much you take out, and it will impact SSI because it comes out as income, and you have to watch how much money that is so that it doesn't impact the overall, depending on what they're getting from Medicaid, what the overall Medicaid spending limit is. So yes, with a whole lot of caveats in there.
Okay.
Because it will, that for housing, it will impact benefits, government benefits.
Okay, Valerie's asking the question. I'm not really sure. I'm going to throw it out there to you. She says that she's confused. She thought government checks goes into a special needs trust. I'm not sure what that's referring to.
I mean, you could, but you can't put it into a third-party special needs trust. Because remember, that government check is your child's money. If they receive that money, SSI, Social Security, the CARES Act, extra check, stimulus check, that is their money. So you have two options where you have three options with it. You can spend it to keep it under the $2,000 asset limit. You can put it into an ABLE account, which is a lot cheaper than a special needs trust, or you can put it in a first-party special needs trust. Do not put it into a third-party special needs trust. That is a big no-no, and that will turn the third-party special needs trust into a first-party special needs trust, which the first-party special needs trust would then require a Medicaid payback to Medicaid at the end of your child's life, whereas the third-party trust does not require a Medicaid payback at the end of your child's life as long as it's managed properly. And wow, I said that really quickly, so your head might explode. Not on purpose.
No, that was a good distinction. All right, so Terry says, I have a small savings account set up for my boys. Should they be ABLE accounts? I'm assuming all of her boys have a disability, probably.
Yeah, I mean, again, Terry, it just depends on how you're managing it, right? If you're managing it well and you're keeping everything under $2,000, then that's fine. But if you're creeping above $2,000 trying to figure out a way to spend the money when you don't have to, then yes, the savings account should go into the ABLE account so you don't have to worry about that. And
Terry, I would add that, remember, this is all being predicated upon you not being here one day. And the fact that you know that there's a $2,000 limit is something you know, but the next caregiver may not. So I would encourage you, if these kids all have a disability, to set up 3 ABLE accounts. It's $30, $40, $50 a year for each one. It does have gains. Like in mine, I make more than it cost me to have. But now it's set up for the next caregiver that it already has the ability to grow to up to 100,000 before it becomes an issue. So I would encourage you, Terry, to, if they all have a disability, to open up an ABLE account for each one of them, would be my suggestion. Chris says, can you transfer SSDI to enable?
So again, SSDI, Social Security Disability Income, is the individual's money. So that individual can do what they want with it. They can spend it or they can save it. And one of their saving options is in Enable because it's their account. So yes, you can take a government income check and put it and save some of it in an Enable account.
Okay. Janine says, can my son have payroll deductions into an Enable account?
I haven't seen that yet, although there is talk about doing that if the employer is willing. So it's really going to be the employer decision for that.
Is she asking sort of like, and you get your paycheck of $100, I want 20 of it to go to this
Right.
account.
That's right. You got it. Yeah, we're right from there. So again, if the individual state able account will allow it, not all of them do. And if the employer will do it, then you could do those two things.
Okay. I don't know how to pronounce his name. Ula Sena. I'm sorry if I butchered that. It's Ryan's fault. She's saying, I'm totally new to this concept. Does every bank have the facility open an ABLE account? The answer is no. Most banks do not. Go to that website that I put in there or type in the word ABLE account in Google, and you'll find locations and resources that you can go ahead and do that to find out where you can get an ABLE account. Annette says, if a child inherits $30,000, can it be split among 2 years?
Sure can. Absolutely.
Really? So if someone dies and says, here's $30,000, they can say, hey, I only want 15 now?
Oh, I thought she meant if the child inherits 30,000, can you split it between 2 years of contributions in the ABLE account? Maybe I read that wrong.
No, I don't know what she means, but I thought that it was a moment in time. She's got $30,000 she's got to deal with.
Yeah. So if you have 30, and so this was that other question I had before about the 65,000 from mom, right? Split with the equity. Well, here's what we had to do. We had to opened up an ABLE account for the 15,000, and then we had to open up a first party special needs trust for the other 50, because you couldn't do it all at once in the ABLE account. So you had to open up both. So, and that's it. If your child inherits 30 grand, you're going to have to do both. You have to do an ABLE account, unless they inherit it on, December 15th, and then you could hold it, and that's still taking a risk, but you could hold it and take the risk of 15,000
and then 15,000
and then 15,000 January 2nd. If it happens in July, though, you can't just hold that money in a checking or savings account, because that'll be over the $2,000 asset limit. Because you could certainly take care of 15,000 of it right away in the ABLE, then you still got 15 grand sitting there.
Okay. I hope that answers your question, Annette, but it makes a question. 30,000 was a nice, neat cut, but what if it was 62 or something? Most likely you're going to need to have something else to put it in above the ABLE account $15,000 limit, I would imagine. That's what it sounds like you did, and it sounds like she would need to do if it was a larger amount. Claire says, do you have to pay taxes when you withdraw from an ABLE? You want to give us a quick answer to that?
Yeah, not if you're using it for qualifying disability expenses.
Okay, Jack says, I'm going to come back to Jack, make sure that's a question here. Jack says, but not only that's not a question, just a statement.
Right.
Annette says, should we shop per state? Any real benefit to do that?
The biggest things that I look for in an ABLE account is they have two sleeves to it. One sleeve is a checking account with a debit card. The other sleeve is an investment sleeve. If they don't have both those sleeves, I would keep shopping until you find one that does.
Right. Because the debit card gives you the ability to buy something on Amazon because you've got a debit card.
Yeah, and allows you to, just like Keith just said, direct payments to the end vendor, right? If there's no way to do that with the ABLE account, it makes it really hard to track where that money is, because it shouldn't be an account that reimburses you for spending your money. It needs to be spent directly with the vendor or company that you're purchasing a service or product from.
All right, let's see here. We're going to go on just a little bit longer than we normally do because we got a lot of questions come in. What if a child dies? What happens to the $100,000 in the ABLE account? Goes first to Medicaid, potentially, if you're in a state that does it, and the remaining goes to the beneficiaries?
Yep.
Okay, there you go, Margaret. Let's see. To issue an ABLE account must put 50, no, Iman, you do not. You can put in less than that. You don't need to put in $15,000 at one time. You can do whatever your limits are, minimum limits are from your state. I think each one's a little different. Yeah. Linda says, if I draw SSA, will waiver services end? I don't know what that means. What does that mean? If if draw SSA will waiver services end?
That's a different topic, but a good one. So what happens is if your child ever has received SSI, that's a very important distinction. And this usually occurs when parents are about to retire or parents get disabled themselves. So let's take the parents' retirement. When you go to retire, you're in Social Security Administration, SSA. That's where that money's coming from, and that's a payroll tax. SSI is supplemental security income. It's a different revenue point. It comes from the general revenue fund of our tax system. Two different places. And so what happens is if your child was deemed disabled before the age of 22, they're considered a disabled adult child in the eyes of the government. So therefore, they will receive a portion of your retirement Social Security benefit when you retire. Whew. So what that can do is, as long as your child was deemed disabled before the age of 22 and received at least one payment of SSI, they will qualify for something called the pass-along program, which will allow you to keep all your Medicaid services regardless of the amount of income you're receiving from that Social Security payment that you have based upon your parents' retirement.
All right.
And I know that's a lot of information, which is why this can be a complex area of planning.
All right. I'm doing something I normally don't do. We're going to go a little bit longer, Ryan. So just give me a few more minutes. I want to make sure we get as many questions answered. John is asking, was the age updated? Remember there was discussion about that.
There has been discussion of the age being updated. And what that means is, you have to be deemed disabled before the age of 26 to qualify to open up an ABLE account. That's one of those qualifications. They're trying to get that increased age 46. And I have not heard that that's passed yet.
Nothing's passed. Okay. Hollis says, if the balance is more than 100,000 and SSI stops, how quickly can the child be qualified again?
That's the concern.
We don't know.
That's why I don't want you to get close. That's the concern. That is absolutely the concern.
Eva asks, if you take money out of an ABLE or a special needs trust, how does that affect your SSI benefits? So takes it out for a qualified expense, I would imagine. Doesn't affect it at all?
Doesn't affect it at all. That's the benefit of having it in those two places.
All right. Would companies like Fidelity be able to act on our behalf to open an ABLE account?
No.
But if you go to that website, that's ablenrc.org that I have listed here, has a listing of all the places that you can get an ABLE account. I think there's like 6 or 7 states who do not have it yet, according to when I looked at it yesterday. Carla is saying, what are the rules around having a qualified gift to minors deposited into an ABLE account? Will that money still be counted as income and affect SSI and Medicaid?
So I don't know if she's talking about the
15,000 annual limit, maybe?
Like a custodial.
It says qualified gift to minors deposit into an ABLE account.
I mean, the gifting rules absolutely can say that you can put that into an ABLE account. I'm not sure if she's thinking about a Uniform Gift to Minors Act, which is an actual custodial account, changing that over and moving it into an ABLE account. Again, you can do that as well. Just have to be careful of process of doing it,
right,
in terms of timing wise.
All right. So Colleen is saying, my husband wants to open a Roth IRA for my son's money since he works. Which would be better, an ABLE account or an IRA? Only gets SSDI.
Yep. So he only gets SSDI, right now. So obviously, if he's only got an SSDI, then you can really do any account you want to. The concern when I see that before is I've had those situations, and the individual has SSDI, they have Medicare, they seem to be doing okay, and then all of a sudden the wheels come off. and we need to qualify for certain Medicaid programs, and yet all of a sudden now they have $100,000 sitting in a Roth IRA and we can't do it, and they got to use all that money to do it. So again, for me, for safety purposes, for having the safety net ready to go in the event of other things occurring where we need to access certain public benefit or service programs, I lean on the conservative side, saying yes, even though you're getting SSDI that's not financially based and there's no financial requirements for it, I still lean on the side of the ABLE account. I mean, what's really the difference between the ABLE account and a Roth IRA? You can actually put more in an ABLE account every year. It still has the same tax advantages of a Roth. And you're using it for your child's benefit, or he's going to use it for his own benefit. So to me, the ABLE account has even more flexibility in that situation, even if you don't need the financial requirement today.
All right.
Because
Rebecca,
you might need it in the future. And the reason I say that is we've had that happen.
And don't forget, you're planning when you're not here, and setting up the proper tools for the next caregiver makes sense. So you're not always going to be here. So Rebecca is asking, and I'll answer it because it's quick and easy. Is there a possibility of having 2 special needs trusts and an ABLE account? You can have multiple special needs trusts. I know that, but you can only have one ABLE account, right? So yes, you can do that. What I don't know is, can you have more than one first party trust? Does it matter?
You can have multiple first party special needs trusts. You can have multiple third party special needs trusts. Question you want to ask yourself is why?
Why?
Because again, it's just going to add cost, which is going to take money away from your child's lifetime needs.
Right. All right. Mary Ann says, my son receives SSDI and survivor benefits from my late husband. Are either of these impacts by amount in his ABLE account?
No. Great question.
Let's see. Can grandparents open an ABLE account and parent-child control, or should parent only start the account?
Well, opening the account it's really, you have to remember that this is your child's account. So it depends on how old your child is. If your child's a minor, then I would recommend the parents open it. Anybody can fund it. So grandparents can still fund it. If your child's over the age of 18, parents are going to have to open it, especially if you're their guardian. You have to. You can't have anybody else open it. And if your child is their own legal guardian at 18 or older, then they have to open it. You can't open it, and a grandparent can't open it. They have to open it and then give you an account power of attorney to be able to help make decisions. Again, like I said, with all this planning, there's layers
right
to the answer. And that's just the way this kind of planning works, guys. There is never a simple answer because the web that everything touches is unbelievable.
It's interrelated. Karen asks, can you use ABLE account for funeral expenses? Yes, you can, Karen. You can use them for pretty much anything. Joanne says, can I charge my son rent to reduce his wage savings and then contribute equivalent amount to a SNT? Or could I take his excess earnings and park an ABLE account?
Can I take the excess earnings?
Can I charge my son rent to reduce his wage savings and then contribute equivalent amount to SNT? So charging him $1,000 a month for rent, putting that into an SNT on his behalf. Or
you can, because it's your money.
Because you're charging him rent, he's paying that rent. That reduces it doesn't reduce his income. His income still the same.
Right.
But it just takes that money out. So yes, you can, Joanne. In a situation like the mother-daughter scenario, could they have taken $15K of the 65 to start an ABLE account?
Yes, and they did.
There you go. Can you disclaim an inheritance to an ABLE account? What if the disabled child is the beneficiary of a trust, but that is not I think she's trying to say a special needs trust as an SNT.
So,
Can you say no? I don't want that money. I think is what she's saying, or can you say I want it to go here?
well, the individual can disclaim it, but then they can't. They have no authority to put it anywhere because they disclaimed it. They said no, we don't want it, so it goes back into the will and goes to the other people that do want it.
Okay. Joanne asked, I think we already answered it, but I'm going to go ahead and ask it anyhow. My daughter was just approved for SSI. There's a big back payment. I'm her representative payee. Where should we put the back payment? Into an ABLE account.
I mean, that's a good place for it.
Okay.
Yeah.
It took me about 3 weeks to get my ABLE account set up, but I delayed a little bit, but it was back and forth. Everything's done online. What if will states special needs trust of child third, can it go to an ABLE account instead? So what if the will states it should go to a special needs trust? She wants to know, can it go into an ABLE account? No. It has to do whatever the will says.
Yep. Whatever the will says where it has to go.
Can we use money from the ABLE account for private education for that child? You can do whatever you want with them, essentially.
Yeah, as long as it's for their benefit, absolutely.
Eugene is asking, but an ABLE account has options beyond just a debit or checking account, correct? Is it mutual fund options? Some of them do, I think.
All right, Eugene. It's good to see you on there, my friend.
Oh, you know.
Yes. Oh, yeah. Yeah. Yes, ABLE, and that's what I was mentioning before, is you want an ABLE account that has two sleeves to it. One, the checking account debit card option, and two, the investment option so you can get more gains. And those investment options are going to be mutual funds that are already preset inside each individual state's ABLE account.
All right. Joanne is asking, do you need an attorney to open a special needs trust account? Absolutely.
Well, here's let me make a distinction there.
Okay.
You need an attorney to write your special needs trust. Then attorneys usually don't open up accounts, right? Financial institutions open up accounts. Attorneys create the document, and then you have to go open the account. And so two very important distinctions there. You need to have a trust created. They need to take that trust to the IRS.gov and get a tax ID number or EIN. Then with that separate EIN, you can go to a financial institution and open up an actual account. That account can be a checking account, a savings account, or an investment account. Again, here's where I would caution you. Where are you going to open up the special needs trust account, and do they have any idea what they're doing?
True. And that's part of the thing.
What I would do is I would find not necessarily an attorney, I would find a financial planner that knows what they're doing with special needs trusts. I mean, that's what I would recommend you do.
All right, guys, we can't get to the rest of all the questions here. Sorry about that. There's still about 20 of them, so I don't want to be all day for those that have been there. But you can find a lot of our content and looking at some of the previous webinars and go through some of them on the ABLE app. We've talked about the ABLE to work component. We've talked about the ABLE to special needs plan or whatever that part was. So there's a lot of useful content that we've already created for you out there.
And what we'll do is I'll ask Keith, I don't know how he can do this. Maybe he can. I'm putting him on the spot. But if he can copy and paste all the questions, what we'll do is we'll start creating some more 2-minute tip 2-minute tip videos that you should receive every Friday. Mm-hmm. And start answering some of these questions, because if you have it, more than one people have it. So we appreciate the questions, and we'll start answering them in those 2-minute tips. And if you're not a part of the 2-minute tippers, I suggest you get on that train.
All right, we're going to wrap up, everybody. Thank you for doing it. I broke my rule of being over an hour, but there was just so many questions coming in that I didn't want to cut everybody off. I thank you guys all for joining us. And don't forget our webinar coming up on the 17th with attorney Steve Dale with the Dale Law Group or Law Firm. They did my son's special needs trust, and I totally recommend those guys. They're awesome. That was a shout out for them. And then Ryan and I are going to be doing our members only webinar on ABLE account. And you come to that, be expecting to get yours done. So No procrastinating allowed. Thank you guys all. Any last words of wisdom, Mr. Platt?
I'm glad everybody came. I'm hoping you got everything out of it that you were wanting to. If you're not on the 2-minute tips, sign up. You get an email every Friday afternoon with a quick video of good information, we hope. And like I said, we'll copy and paste these questions, and that'll give me quite a lot of work to do in creating 2-minute tips, and then give Keith a lot of work to do in figuring out how to make them look better than I can do.
All right, everybody. Thank you. Have a great weekend. Everybody stay safe. Thank you, guys.